All right, if you're following along in this series of me learning options and basically trying to make an income from this. Oh, real quick, before we get in this, you gotta check this out. I thought that I spoke for like 20 minutes. And of course, 20 minutes, I condensed that hopefully down into like 5 minutes or something. But thought that it didn't record. And here's my reaction to that. So making these videos is not easy and it's not perfect. Am I not recording this whole time? Oh man. Shit. All right, start all over. To get into. So let's just go ahead and take a look at the numbers. Again, my intention is to help others learn this complicated thing called options and any other investing that we eventually get into. It is recording. Okay, sweet. But thankfully it was recording and I just didn't see the little pop-up to stop the recording. So when I saw that, I was pretty happy. But anyway, back to the video. Then you'll see that this update is a lot better than the last couple updates we've had. Although those are turning out pretty good. And what I mean by that is the market, you saw it, everything went down substantially. And the market basically recovered and then some. And so naturally my accounts are going to be up, and we'll go through that here in a little bit. But I think what's the coolest thing that I'm learning right now is, and of course, listen, I'm not some options expert. I'm learning as I go, and just hoping to share my experiences. But one of the things that I've always kind of been dead set on is running the full wheel of the option strategy. And that includes the covered call side. I'm not going to get into the details of all that. You can go back and watch some of the older videos or watch other videos. But the covered call side was the side that I was very much looking forward to, mainly because you can get the premium for saying you will allow somebody to buy your shares at a certain strike price. Plus, you get the gain from whatever strike price you set for that option above what the strike price that you got the shares assigned to you in that original cash secured put. So that's some good stuff. We're going to take a look at how my covered calls are finally playing out, starting to look good. And I think they're going to save December and basically make us hit December goal, maybe even exceed it a little bit. And also what I want to talk about is just a massive learning for me. And it's just such a big change in the way that I'm going to start to show my numbers and how well I'm doing versus how well I'm not doing. And it's the realized gains. And the way Schwab does this with the premiums that you collect kind of really changes things. It changes my entire numbers for November for sure. And it's going to change my numbers for December. Maybe not as much, but definitely for November. So remember, for November, I thought I far exceeded, and I actually did not even hit goal when I look at the realized gains, and I'm going to explain why. And before we jump into the numbers, I didn't put out one of these last week because it was Thanksgiving and I was fattening up my belly like I hope you all were, and spending some time with family like I was as well. So this will be the update from basically 2 weeks ago. So it's a 2 week snapshot. And then again, if you get any value out of these videos, I'd appreciate a like and a subscribe. Now, just sends these a little bit further. And, again, my intention is to help others learn this complicated thing called options and any other investing that we eventually get into. So let's just go ahead and take a look at the numbers. As you can see, we've had a pretty big change. Last time, it's actually pretty interesting because last time we looked at these numbers were almost flipped. They were almost reversed, these exact things. They were red, so we're down like 18,000. Now we're right back up 19,000. Basically, in the 2 weeks since I put out a video, these accounts have gone right back to where they were the prior week to that. So my accounts are basically fully recovered to where they were about 3 weeks ago, with the exception of a couple stocks that we'll take a look at. But for the most part, doing pretty good. Catching back up, feeling pretty good. And we'll take a quick look at the website just to show you. Same, the numbers are going to be slightly different because I typed those into my PowerPoint a little bit earlier. The market's still open. So it's moving right now. But for the most part, you can see today, accounts are up $7,000 just today. And I'd put out some videos where they were down, at 12 or something $1,000 in a day. So it's just a big swing with these options, and that's okay. But as you can see in all of my unqualified stuff, severance, and by the way, that change includes a draw from my severance from the beginning of this month. So it's actually up a little bit more if you take that draw into consideration. The severance is kind of winding down a little bit, but I do anticipate moving over some of the gains from the options account to beef this back up by around another $8,000, and I'll cover what that means in here in a little bit. Again, I started to play around a little bit with the emergency savings. This is technically, it should be around 30,000 bucks, but I got assigned some BMNR shares in there, and I was just trying to earn a little bit of income. I got caught on BMNR, so I'm just letting that recover and then go from there. Long-term investments, remember we moved a little bit out of there to support growing the options. And then finally, my LEAP options are up. So PSIX, HEMS, NVIDIA, and there's one other one in there. And basically PSIX is making a big move today, and that's driving up this account. So finally, my LEAP options account is green, and that's exciting. And then in the options trading, you can see that it's back up to 140, and that's a pretty good number. The reason for the difference here for the 205 and why it's 225 in a spreadsheet is because, remember, I'm holding some shares from a Fidelity account, brokerage account, that I'm eventually going to move over. I'm just trying to cover call my way out of those right now. Once those shares leave my account, I'm just going to take that cash and move it over here. So the balance in the PowerPoint is representative of that account plus this account. All right, so now taking a look at how we are in the details of this, and this is what I was talking about. So a little bit of an eye chart here, but the biggest thing I added is I added a new row for realized gains versus unrealized gains. So let me explain that a little bit, what that means. So unrealized gains is, think about it like this. If you sell a cash secured put, you get the premium, let's call it $100 for that. And you get that cash right away, but Schwab will not realize that until that option either expires or you buy that back. Let's say you buy it back for $10 and you end up keeping $90 of that original $100. The day you buy it back or the day that it expires is when Schwab says, hey, that's a realized gain. And I kind of knew this, but it really hit me in the month of November. The reason that is really important is because if you get assigned those shares, then Schwab will take that $100 in premium that you've been paid and subtract that from the total lot cost that your stock is for. So for example, if you got 100 shares for $10 assigned to you at a $10 strike price, what Schwab is going to do is say it's not really $1,000. They're going to say you made $100 off of this already, so it's $900. That's basically your cost basis. So then you divide that 900 divided by your 100 shares to get your true cost basis. And so it gives you a little bit better cost basis in what you actually got assigned for. So that's a good thing. But what it does is Schwab basically absorbs that premium into that cost basis and now rolls that into the future. And what I mean by that is where I thought I was collecting $100, call it in November, if I got assigned shares and I don't sell those shares until 3 months later, Schwab's not going to realize that till 3 months later. So they track it different than the way I was tracking it, and that's okay. I spent a lot of time this week and last week just really kind of deep diving and soul searching on how I wanted to realize this money on my own. One way to do it is to spend the money now and basically earmark it for the future, and just know that you can't sell those shares below the original lot cost of $10 instead of $9. And also you run the risk of basically locking yourself into that original cost basis of $10. And let's say you want to just get out of these shares and you want to get out of them at $900, your cost basis. Well, you want to be able to do that, right? So the easiest way to do it, and I my mentor basically convinced me of this. I knew it was the right thing to do, but he convinced me yesterday, is just go off of the realized gains. What it really does is it slows down the month that you're in when you're getting assigned shares, but it could make future months better, right? Because remember, all these assignments, these dollars are getting rolled into these lot costs, and they're moving out to futures when you sell them, if you sell them. So I've got a system that I'm going to account for that, because I want to make sure that I kind of keep those original premiums And I'll show you what that looks like here in a bit. But for the most part, what you can see is it didn't really affect October. But in November, I wanted to earn $5,500, and my unrealized gains, what I thought I earned was $9,300. I mean, that's all the premiums that I collected. But some of those premiums, I got assigned some of those lots, so the premiums rolled into those lots and are carrying forward. So the realized gains that Schwab shows online, basically I'm gonna have to pay taxes on, is only $4,600. So you can see I actually missed goal by almost $1,000. Not a big deal, but what this gonna do, I'm only gonna move $4,600 over from my options account into my severance account, because that is what I actually realized months. So not a lot to look at for December. Basically, the way I'm tracking December is until the month is finished, I'm not going to switch over to the realized gains, because there's a lot of stuff that we're doing in December. You can see I was targeting to hit about $6,000 in December. I've already reached close to $6,700 in premiums. So on paper, I've already hit my December goal. And that's what you want to do. You want to hit your goal before the month even starts from previous month's activity. We already know that. We already talked about that. But based on how this month shakes out and what actually gets moved in the future months versus what gets realized in this month is going to determine whether or not I truly meet my goal. And we're going to know that closer towards the end of the month. So that's the big revelation and kind of the wake-up call that I've had over the last couple of weeks since we've talked. But that's okay. I mean, that's just part of it. And I don't see any scenario where I'm not still very happy with the outcome of this. Even at making $4,600 a month, what you'll see is it's pushing a lot of potential gains out into the future to set up for some pretty big months in the future. And that's what we're going for, right? Is just to continue learning, to continue ramping this up and getting better at it each month and hone in on a real consistent 3 to 4% gains every single month. And let me show you exactly what I'm talking about with the covered call. So we're going to go ahead and unfilter all the closed ones. There's no point in talking about those. These are all the covered calls that I have open right now. So what I did earlier was I highlighted the ones that I felt like were most likely going to get assigned. And let me show you what I mean by that is, so you can see the expiration on this one for Rocket Mortgage is December 5th. This one on FISV is December 12th. So December 5th this Friday, then the 12th is next Friday. And then we have, looks like 4 set for the Friday after that. And then a handful of for the Friday after that. So what's cool, and I'll show you this on the charts, a lot of these are in very, very good positions. And what's cool is, I'll show you this on the charts, but the ones that I have highlighted in green, it looks pretty good, unless the market has a big pullback, which it could, because the Fed's going to announce whether or not they're going to cut rates next week. Right now, the probability is very high that they will. If they will, the market's going to react favorably to that and continue to go up. And if they don't, the whole market's going to pull back, and that's okay. None of these will probably get assigned. I'll be able to sell those covered call options at a good percentage of their premium and then start the whole process all over again. But I'm thinking that these will probably get assigned. This yellow one for VST, I don't know if I'll get assigned. It looks pretty iffy, so I'll show you what I'm talking about. But if these all get assigned, I did the math earlier, it's basically like $3,100 that I would get in profits plus premiums. And you saw we're already around $6,000 for December. It's unrealized, I get that, but these would be realized gains. And if any of those other ones turn into realized gains, we could be looking at another pretty good month. Definitely a hitting goal month. So let's go ahead and jump in the chart and I'll show you what I'm talking about. I just moved that out of the way for you real quick. I'm going to minimize this just to give you more chart viewing space. And we're just going to look at these one by one. So Rocket. What you can see here, if I zoom in, I've got 2 covered calls for Rocket. You can see the green line indicates, the way I built this is that that's when it expires. You can see that Rocket has made it above that. Now it's coming down a little bit, and it could potentially come down a little bit even more tomorrow, but I'm not thinking that it'll come down a whole $1 by tomorrow, although it could. But I will very likely get these shares called away at $18.50, and my cost basis on this, I got it down here, which is about $16.72, rounded up to $17. I'll make $1.50 per share. It's 100 shares. That's $150 plus the premium I collected. That doesn't sound like a lot, but on a company like this with a low share price, that's a good percentage return. Go back to my spreadsheet real quick. overall, that will be a total profit of around 16% collected in 24 days. Collected in 24 days on a monthly basis, that's around 20%. On an annual basis, that's around 235%. You can't complain about that. That's phenomenal. So let's take a look at the next one. Hood. Where's Hood at? Again, zooming in on Hood, right? It's currently trading above 130 bucks. And if I do get it called away, I would again make a profit on that. This one's a little bit smaller profit, but it's still a profit. Same thing with FISV. If I look at FISV, this one is actually one, I got to zoom in because it's got a crazy chart. But basically, this is impossible to read because they drop so fast. Their chart is just dang near impossible to read. But basically what it means is I got a covered call for 300 shares at 66 bucks. And it's trading right at 66 bucks. And this one expires next Friday. This is one where I actually don't want to get these shares called away. So I'm kind of hoping FISV stays right here or goes lower. Because if I want to kind of ride this one up a little bit, my cost basis on these shares are much higher. I got caught up in the same a lot of people. I got caught up in a big drop from there to there. Big gap down. So my cost basis is way up here. Yes, I was gambling a little bit, trying to set a pretty high covered call, but well below my cost basis, saying that, hey, I'm just going to earn some premiums on the way up. And there's a risk to doing that because if it reaches that strike price, you got to sell those shares. So overall, I would take a cost basis loss, but I'll still make a gain of what I set from earlier about 2 weeks ago. Going down the list, and I'll show you one that I did not have highlighted, HIMS. This is a good example of one that you can see I have a covered call is what CC means. And you can see, we're pretty far away from that, right? So today is where the stock is trading. The end of this is on the 19th. Got all the way for 2 Fridays from now, but still, it's trending kind of slowly. So it could maybe make it up there, right? I mean, if you counted these bars on how long it took to get down versus how long it takes to get up, maybe it makes it here, but very unlikely. It's got a pretty decent way to go. Taking a look at SOFI. Again, another one where you could see there's a lot of noise on this. I apologize for that, but basically, if we go back to my sheet, I have one target strike price of 28 bucks, and if it made it to 28 bucks or higher, I would get a $438 return, which on top of my original premium of 4%, and it's a round trip of around 8%, 25 days. I mean, that's an 8% return in 25 days. For context, a lot of people are happy with an 8% return for a whole year. Anytime you build retirement modeling or anything like that, you usually use between 6 to 8%. You say, I would hope that my money grows at least 6 to 10% year over year. That would be a pretty good year for my retirement accounts. I mean, we're here. I'm showing you right now where I'm earning potentially 8 to 15% in a month. So there's a lot of power in these options. Of course, it's investing in the stock market, and it's risky. Everything has risk. You saw that in my prior videos where I was down $20,000, $30,000, and now we're right back up. But it's a fun ride, and that's what I'm talking about. So where's SOFI? SOFI today is at 29 bucks. So if SOFI holds the line or continues to go up the next couple weeks, those shares would be the same. VST, I'm not sure. This one's got a long way to go. So you could see my covered call is all the way up here at 195. The shares are trading around 176. Can it get to 195 in the next couple weeks? I don't know. We'll see. And then finally, if we take a look at BMNR, this is one that I did not have highlighted. I think it's just got too far away to go. Again, zooming in a little bit. BMNR is on an upswing, which is good, but my covered call is all the way at 45 bucks. And I don't know that it'll get to 45 bucks. All the way from 35 bucks. That's a $10 change, but on a stock that's only worth 35 bucks, that's a pretty substantial percentage change. So, and that's okay. This one will likely expire worthless. I'll get to keep the original premium, and then I'll just start a covered call all over again. And now let me quickly show you what I was talking about on Schwab. So if you go over to Schwab and you go to this realized gain loss tab, you can change the different accounts. You can look at them all however you want. But basically what it's showing is like, hey, for the current month, this is the realized gains. These are things that I've actually realized. I've either closed the cash secured put early, so it realized that right away, or whatever it may be. So unfortunately, I can't look at the last month, but if I do a quick custom date range for November and then do a search, you can see it was 41.41. So on paper, I earned $9,300 in premiums, but some of those got moved out because we got some assignments, and their premiums followed those assignments. And there'll be gains realized later on. So that's how Schwab tracks it. And real quick, let me show you one more thing what I was talking about. The way I'm going to kind of counteract this from the best scenario I can think of is I'm tracking the initial cost basis versus the premium adjusted cost basis. The only thing that means is, remember, my premiums were really good for PSIX, and they got rolled into my cost basis, which basically just means my overall cost of ownership is around $87 per share for these 400 shares that I own. But my original assignment prices were around $91 a share. So the reason I'm tracking this is because when I set a covered call, I'm trying to go for the initial cost basis. What that's going to allow me to do is basically capture back that original cash secured put premium, because remember, that's built in. So if I go back to the original cost basis, it's going to capture that back, right? Because that's built in. And if I go above this cost basis, let's say I go to 95 bucks, and that's exactly what I have for PSIX. I have one lot out for February for 95 bucks. Or if I go to 100 bucks, and we'll just use 100 bucks for simple math, that would be $9 in appreciation on the stock, plus the original premium, which is built into now that adjusted cost basis. So I know it's a whole lot of craziness, and it makes sense to me, and that's going to be my best way of trying to not make sure that I don't lose those unrealized gains further down the line, and I'm basically just moving them out into the future. And I believe what that's going to eventually do is, as I come in and out of these calls and cash secured puts, it'll start to stabilize. So things that I've done in 3 or 4 months ago will start to hit in this month, and things that I'm doing now will start to hit in 3 or 4 months, or this month or the next month, and eventually it'll just start to get on a good cadence of normalization. So that's what we're going for, and that's everything for this week. I appreciate you kind of hanging in there. Hopefully this added a little bit of value. I know we went into a lot of the sausage making. So that's it for this week. I appreciate it. And if you're new here and want to even figure out why I'm even here, check out that video right there. That'll be the one that shows the start of my journey to where I'm at now. And I'll talk to you all next week.